This conference will now be recorded.
Good morning, ladies and gentlemen. This is Fluid Safe Trading Frank. It's approximately 10:21 a.m. on a very rainy morning here on the New Jersey, New York waterfront, New Jersey City waterfront. Welcome. It's March 28th, 2020, 10:21 a.m. Full disclosure, this is purely for financial education, not for any solicitation or advice. This is this I believe is the third or fourth advanced coaching session for paid members. And some of our newer members have been invited to join on a complimentary basis. I would like to make an important administrative notification for people who have signed up for the ACS, and this is their third or fourth class. I don't have that direct off my head, but the payment team will send me a notification by tomorrow or Monday morning. I invite them to continue with this ACS sessions at a bigger discounted rate. I'm sure I can ask the payment team and they will give that. These are extremely important and critical. As you know, there's a lot to learn and we cover it topic by topic. And I would highly suggest that people who have the first batch of people who signed up for the advanced coaching sessions go ahead and re-sign back, and they will get, I believe, they should get at least a 20% plus discount, which certainly is a huge help, as you know. For newer members, and repeat, like Greg and other people who have signed up, these are the complimentary sessions you're sitting in, and you're welcome for that. But I would highly suggest that you guys go ahead too and sign up on the website for the 5-pack group sessions. Don't do individual sessions and stuff. I have some members who do individual sessions. They cost more money. All these things, I keep it so cheap, it's not even fun. You try getting these type of training, advanced coaching things, other places, it's going to cost you thousands of dollars, if not hundreds and hundreds. And here we keep it at a low rate of $50 or $60 a session, or something like that. And for the individual sessions, it's $100 a session or 99. I do not recommend that for people. I have some members who continue to do that with me. It takes up a lot of time. That's fantastic because they want more personalized, customized training. But I don't have all the time in the world, so I wouldn't recommend to any of you and the people who will be listening to this and to sign up for group sessions. To sign up for a single session. Just sign up for the group sessions. Go on the website. Go to members content. Hit members area. Right there. Okay, and you click this link and it walks you through. One quick technical glitch there is, and we've never been able to fix it, is there once you go into the sign-in process, there is a box for newsletters. And don't check that box. We don't do newsletters, as you know, at least not now. We did it at one point, but because of all the fantastic real-time webinars, updates, the Twitter feed, the newsletter has been, for now, has been shelved. So do not click the newsletter box, and it stops sometimes. So that's it. You just have to click this link and then go through the sign-up process, 5-pack group sessions. They're cheap, and please go ahead and make sure that you do that, and that's it. That's the administrative provider. Okay, on that note, let us begin. We are going to today discuss charts, technical charts. And we are going to start off by discussing technical charts. And I'm going to pick up one particular asset class, which is the VIX, the Volatility Index. As you know, the VIX is a derivative. It moves in very simple terms. A VIX is the inverse correlation or opposite of what the markets are doing. You guys both know that by now. So when the VIX goes higher, it's also known as the fear index, then the markets go lower. When the VIX goes lower, the markets go higher. It's really, that's it, direct inverse correlation. Stop me anytime that you need me to clarify anything, but I'm going to go through first and I'll take your question. Fair enough?
Yeah.
Okay. The VIX is the ultimate canary in the coal mine. That's an old term. You know, back in the days when we didn't have advanced technology, they used the canary, the small bird, in a cage through the coal mine. So whenever there was carbon monoxide and any other poisonous gases, the canary would basically alert it by dying or, whatever. And the coal miners would know not to go into that part of the coal mine, deep underground. So the VIX is exactly that. When it's giving you signals as to whether or not you should enter on the long side and it gives you signals if the VIX is rising that you should enter on the short side. You guys both with me so far?
Yeah.
Are you guys with me? If you have any doubts in your head, it's very simple. Please ask, because then I'll explain it again. The VIX is the inverse, opposite of what the markets are doing, what equities are doing. Are you guys both? I want a yes from both of you. Do you guys understand that part? Because I show the VIX a lot.
Yeah.
Okay. Greg, I didn't hear from you. I think he dropped off and he came back. Greg, are you there?
Yes, I am. I was having some internet issues. Sorry.
I know. So let me just repeat. Today, I mean, I don't know at what point you dropped off and came back, but today we're going to look at the bar chart, which is part of the QUODD platform. But more importantly, we're going to look at how I read these charts, and I'm going to show you individual stocks. But right now, we are covering the topic of the volatility index, or the fear index, known as the VIX. Now, the VIX is an inverse correlation, opposite of risk assets. Risk assets means stocks and stock market. So you understand that part, correct? When
Correct.
the VIX goes higher, the markets go lower. When the VIX goes lower, that means the fear index is coming down. The markets go higher. You guys are both with me on that, right? I show the VIX charts quite often, and as I was explaining, the VIX is like the canary in the coal mine. It's like the early warning signal that you should enter. You get an idea whether or not the markets are going to reverse higher or lower. So it's obviously important looking at the VIX too. And as you become more of a proficient trader, all of you, then you'll be using the VIX quite a bit just to get an idea whether or not the market is about to push back. And I'm not talking on, like every minute or whatever, but let's say on a 15-minute, 1 hour basis, and whether or not you should enter a trade. You guys are with me so far, right?
Yes.
Yeah.
Okay, sounds good. Now, I'm going to make this really simple. It is actually quite simple. So first of all, I've asked you guys, all of you, it's almost mandatory that you educate yourself a little bit, a lot, not just a little bit, in candlesticks, so that you get to know what these candlesticks are all about. They're not hard, they're very easy on the eye, but just so you understand what some of these, inverted hammer, this is a massive hammer reversal with the head on the top, long tail. What a long tail reversal is. This is a long tail reversal. All that stuff, you guys have to do it on your own. Doesn't take much. Just on one of the YouTube videos, candlestick pattern. Spend 15 minutes, 20 minutes on it. You're going to come out understanding more. All right? So just make sure you guys do that. Okay. Saying all that, this is a chart of the VIX, the volatility index, or the fear index. So in the business, it's called the vol, not volume, like vol, they call it. I'm just going to say volatility. In itself, volatility is just means uncertainty, right? So that's what it is. Shorts love volatility because that means that the VIX is going higher. That means they will short whatever they're shorting, they're making money on. Us, mostly longs, we like when the VIX falls. When the VIX falls. So that means the markets are going higher. It's really as simple as that. Stocks are going higher. Volatility, also known as the fear index. Want to know more about it? A little bit, the dynamics of the VIX. Then go to Investopedia, which you guys are aware by now is the ultimate source of all kinds of information or definitions of all kinds of financial terms, technical, fundamental, all that stuff. So make sure you go to Investopedia and type in the VIX and learn more about it. Okay. So I watch the VIX on one of my screens. It's always on. During markets which are zigzagging intraday, the VIX also will be doing that. This is a hourly time frame. So every single candle is 1 hour. You guys with me so far, right?
Yeah.
Exactly.
Yeah.
So let's say first thing in the morning, I'll give you an example, Friday, futures are down big. So I look at, and I was showing the VIX from the day before too. I show it every day, a couple of times. Okay, take a look at it. So I noticed that this was the close on Thursday, the VIX, and I will explain to you in a couple of minutes the direct correlation between the internals, which I use for stocks also, which is known as the stochastics. STOC, this is a fast stochastic that moves faster, back and forth during the day, shorter time frames, and this is known as the S stock or slow stochastic. You've seen me put the S stock down, right?
All the time.
There you go. That's the answer that I want, all the time, because this is what we make money on. These are the internal blood pressure, blood routine, right? This is external. What the person looks like, the patient looks like. The bottom is what is really happening inside your body. So S stock, and this is F stock. F stock also can mean full stochastic, but this is not a full stochastic. This is a faster. Faster will have more ups and downs. The S stock is more smoothed out. It will be slowly up and down. I'll explain the correlation between that and between the front side, which is the price movement, and in this particular case, VIX, which is, I repeat again, which is the opposite of the market. I'm going to write this down for other people to know, register in their mind. When the VIX goes higher, what happens to the market? When the VIX
Goes lower.
Exactly, very simple. Goes lower, and vice versa. When VIX goes lower, markets go higher. Real simple. Okay, now let's clean the screen out and go step by step as to how to read this chart. It's not hard. Okay. So this was Thursday when the markets closed. Friday, the VIX, let me just make sure the timing is correct. This is real time. So this is 3 a.m. in the morning, right there. Okay, so this is what the market closed 4 p.m. on Thursday. Make this bigger. Then the market closed at 4 p.m. on here. VIX was rising a bit. Nothing too alarming, but it's rising a bit. Then comes Friday. This is 3 a.m. in the morning, 3 a.m. Markets are not open. You see the systematic rise. Each hour is a candle, all the way up to the VIX till 8 a.m. and then comes 9 a.m. right there. See? 9 a.m. So by this time, the VIX is reaching the upper end of the VIX has reached the upper end of this band on the resistance bands, which I showed you guys. So once you guys, as you guys are getting more and more used to it, of course, learning quicker, you notice it's reaching a major resistance. This is a resistance line. See, every time the VIX came here, 1, 2, 3, it should reach a wall and it should come down. That's exactly what happened. So as the market opened up down 800 plus points, almost 900 points, what did it do for the next couple of hours? 1, 2, 3, 4, 5, 6. Till 2 p.m., the markets were recovering. The markets were recovering. They were actually down 800, down 700, down 600. It was going back and forth, but the markets were actually going higher between the hours. Right when it opened, you see the red candle. So that means that the systematic, automated, it's all automated. It's all black box, algorithmic, high frequency trading black boxes, okay? They started selling the VIX right at the resistance. Selling the VIX right at the resistance. And the market started to rise from the bottom. Not everything, but the markets did. And so that's a good sign. So that means the markets on the other side were moving higher. It's kept on doing that till about 2 p.m. And then at 3 p.m., we were down only at 1.300 points. You guys did follow what happened on Friday, right? Because this has to know what's happening on my real-time Twitter feed. And I showed how the markets were moving nicely higher. In fact, broke out big time. Not green, but broke out from the, here, this chart will put this in time frame, right there. So the market basically See, it's like a jigsaw puzzle. You put it together, and then the picture comes to light. And that's pretty much what I do as a technical chartist. The best way I can explain it. So if you notice, the market, I said this was a consolidation channel, profit taking. This is what was happening on the 27th. The market opened here somewhere. And from the time that the markets opened, we never broke this red line, and it started to climb higher. In fact, went quite a bit higher as the VIX reached a low at 2 p.m. And it looked really good. VIX at a low for the day at 2 p.m. between 2 and 3, and the market reached a high. It was a nice breakout. See that? It was a nice breakout, and it was supposed to go there. But hey, we live in the world of margin calls and all that stuff that I explain all the time. And lo and behold, there was the VIX popped up. And when the VIX popped up, we got an immediate sell on the market from being down only 300 points. And when I say only, that's a recovery of 600 points from minus 900 to 300. That's a gain of 600 points from the bottom. Are you guys with me so far?
Yeah.
With you.
Yeah.
This is, I repeat again, it's not rocket science. It's explained in very simple terms, and that's what makes you money. If you don't understand something, don't be shy. Just say, okay, can you explain that again? So the market was looking really good. Technically, we're still fine. But then it was looking really good, because that's exactly what both flags do. They consolidate for a day, for a couple of hours, and then they start to break out. And that's exactly what the markets were doing till 2 p.m. So when the markets were at the highs, meaning here it was down 900 at the open, and here at the top of the market, high of the day, we were only down 300. It's looking, good. It's just the automation part. And that was this time here at the VIX at the day's low, 2 p.m. All right. Then boom, this automated sell programs came in from nowhere, and no one should be surprised anymore because this is the norm. There were some big sell programs that came in, and the VIX popped up. These two candles, these are the last 2 hours, 3 o'clock, 4 o'clock, and you saw this red bar sell candle that came in, and the markets went from being down only 300 back to was being down 900. You got it?
Yeah.
Exactly. Now, so hey, Franco, you're in. Okay, that's good. So basically, we study the VIX to get an idea on what the markets are going to do, but these sudden sell-offs that come in the last hour that came, nothing we can do about it. So what I do is I go ahead and try to see, which I always do, is what are the internals? What's the story? Is the VIX really going to shoot up and go nuts, or is there a possibility of the VIX? This was just a quick last-minute sell, and I wasn't that surprised because Friday afternoon is the last of the big margin calls. And when I say big margin calls, I'm not talking about margin from you and me. I'm talking companies and hedge funds that need to come up with 10, 20, $30 million of cash to settle their margin debit, and they couldn't come up with the cash. So the margin director says, that's it, sold. So 10, 20, 30, $40 million worth of assets, stocks, and other securities are sold within a matter of minutes. That's the reason why the market dropped like that. Markets just don't drop like that for fun. And this has happened repeated times in other times when you get this big sell-off. And that little sell-off that we saw from being only down minus 300 Dow Jones to down 900, that's a 600-point drop within a matter of less than an hour. And you see how the VIX move. You guys are with me so far on the same page?
Yeah.
Okay. Now, I'm looking at this VIX. This is a 1-hour chart. This goes back all the way. Well, I'm looking at this pattern here. So I want you to focus on that. I'm trying to get the pen. Okay. So I want you to focus on this pattern here. That's the one that I was showing all day. And the bottom end of the range is this. This is a long tail hammer. This is on what day was the 24th? The 24th was a Tuesday when the rally started. Okay, the monster. You know, when we went up thousands of points, that's when you had 25th, 26th, big squeeze to high. These were the thousands of points of rally, 25th, 26th. So anyway, so what I look at is this is the range I'm looking at, not exactly from the bottom, but this one. So the VIX has been traveling in this range back and forth, back and forth. When the VIX goes down, that means the markets are going higher. Okay, a big move here. VIX came down really hard. This was actually before the market, and the markets went ballistic. So this is the range that I'm looking at. So this, if I look at this pattern, it is basically trading within a range, just like a stock. 56 at the bottom, upper end of that where it got hit is let's call it 69. So we got 56 on the bottom, 69 on the thing. So we got 13 points here. Is everyone with me so far? Greg, Aldi?
With you.
Okay, so you got a 13
Yep.
point. You got a 13 point channel range, right? A horizontal channel, 13 points. Now, simple question I'm going to ask you: if it breaks above, and there is obviously a big resistance level at 76, is if the VIX for whatever reason on Monday hits the 69 and then breaks out, is the market going to open lower or higher?
Higher.
What the hell are you talking about?
Lower.
I'm sorry, VIX, yeah.
Yeah, you got to understand this. When the VIX is very critical to put inside everybody's brain.
The market
Because when
is,
I'm showing the VIX chart, the VIX, I repeat, is the opposite, inverse correlation. It's the opposite. It's the enemy of stocks and the stock market. So when the VIX breaks out, goes higher, that means the markets are going to go lower. You have to know this just the way you know the 5 fingers in your hand, 10 fingers in your hand. Okay, so I repeat my question again. If on Monday morning we see the if the VIX early VIX, you know, I can see the VIX futures trading 24/7. You can do that on your iPhone. If the VIX futures are spiking higher and it's broken over this level of 69, then the futures, the pre-market futures for stock market, will they be higher or lower? If the VIX futures are flying higher, will the market futures be higher or lower? Come on, guys.
Lower.
Aside from Aldi, Greg, Franco, are you guys getting it?
Yeah, I'm following along here.
By now, you know that the VIX is the inverse. I repeat, inverse correlation, the opposite of what stocks do. It is the fear index, the volatility index. When they say volatility is rising, when I write that, what do I mean? It's happy times? No. That means that the market's going to pull back. So get that. It's very simple, man. It's very simple. I know it's a new concept, but it's a concept that I show all the time, and I've explained it before, but this is a specialized training session, so I'm going deep into it. All right. So if you see the futures down a lot on Sunday night when I do my session, right? 6 p.m. it starts, the Globex futures, that means the VIX is pointing higher. If the VIX breaks out over 69, just like any other stock, the next level of engagement or resistance is 76. If the VIX is shooting up towards 76, we will have, at least at the opening, another 900 point down opening. Are you guys with me?
yeah.
And it's not going to feel good because net, I have long positions. And I have a few puts that I bought at the end of the day. But that could be it. That could be it, meaning that could be the end of the market pullback, because over 76, the VIX will try to head towards 80, and that means, like, again, that means like what? We're going to be down 3,000 points? I don't think so. The VIX hit 80, which is a historical high when the market crashed. Okay, when the market fully crashed, the VIX hit 80, 85. You don't get VIX at 85, guys. And this is before the Federal Reserve moved in hard. The third time, this is before the coronavirus bill. So all those back stuff have been put in place, just so you understand. So I don't think the VIX is going to get hit 86 again. I think we will find major wall at 69, and then if it breaks above that, then it's going to be a short-term sell-off like Friday. Well, it's doing fine till Friday till 2 p.m. It'll be a short-term sell-off, so that means the market will basically say, okay, time to move on. Now, let me explain to you guys the correlation of the VIX and what happens to the stochastic, which you guys by now should know, but let's explain. So the way I try to determine whether there is a chance of the VIX moving higher, I think that by the time, by Sunday night, when futures open, most probably futures are going to open lower. Why? Because the U.S. market opened lower. I mean, closed lower on Friday. It closed down 913 points. I'm going to go over all that stuff on my Sunday night webinar. So no surprise there. If the U.S. markets open that much lower, then obviously foreign markets will pick up some of the selling in the early session. Are you guys with me?
Yeah.
Okay. You know what it means by early session. That means the first 2 hours or so. All right. So it's natural. So in that case, the VIX futures, which trade in the Globex market, which is the after hours, market, should technically go where? If the foreign markets open lower, our futures, the Globex futures open lower on Sunday evening after 6, when they start trading. Just use common sense. Where will the VIX go? I'm going one person at a time. Aldi. If the Sunday future, Sunday after 6 p.m. when the futures start trading, and there is some overflow selling in foreign markets, in Asia, in Australia, because we were down 900 points, there will be some overflow selling. On Sunday evening, I'm just going to put this there, once you guys understand this. Sunday evening, futures open lower. Futures meaning the E-minis. Okay, so let's say they open lower. I'm just going to give a number by 30 points. Where will this VIX futures be?
It'll be higher. It'll be higher.
Okay, higher where? I want a specific answer. I already showed you where it can go to.
Oh, it's 76.
You're right, 76. You'd be crying in your pants. You're telling me that it's exactly. Thank you, Franco. 69. That's the first level of contact. 76 means we're going to be. 76 means, hey, it could happen. All we could be right. 76 means that we're going to be opening down 900 points.
I hope not.
Monday. I hope not too. So I don't think the VIX will jump up 30 points unless something really, really dramatic happens.
Yeah.
You understand what I'm saying? Like the news, like I don't even know what bad news is anymore because we are surrounded by bad news and we're still making money. But the news is thick. You can look at any news source that I look at or your site. It's all bad news. Aside from some good news that the coronavirus system, So bottom line is not 76, 69. Greg, did you get that?
Gotcha. I'm on.
Okay. So bottom line is this is resistance. This is going to be the first, and this is exactly where the VIX hit around 69 on Friday morning, and it started to sell off, and the markets actually were going up. We opened down about 900 and God knows how many points, and we actually climbed. We opened down 900, and by 2 p.m. when the VIX hit a low, like I said, we were only down minus 300. Till the last 2 massive sell programs came in, which I, in my opinion, would attribute to margin selling. And the last minute, they said, that's it, you didn't come up with the cash, boom, sell you off. And that was what the VIX moved. Now, let's talk about the internal. Very simple. This is known as the stochastic. This is known as the fast stochastic. STOC. So the fast stochastics move up and down like a wave, just like the VIX does. So here, it got oversold. By 2 p.m., the fast stochastics got oversold. When the fast stochastics got oversold, and then the sell program came in, now it's rising. And you can clearly see it wants to rise up towards that level where it should get banged down again. The same thing with stocks when we use the stochastics. You guys understand that part?
Yeah.
Exactly. So the fast stochastics would not have made this move higher. And you notice like every single time the fast stochastics is really oversold. This was at the bottom of the range. This was in the middle.
It has a
So
correlation.
always, it's with stocks, with things. That's why, like I said, I show you guys a couple of very simple internal indicators. The more you see it, the more you understand it. And for advanced coaching sessions, they obviously understand it a lot better. The better off you'll be able to manage your trades. It's pretty as simple as that. Doesn't mean you have to jump around every time that it gets oversold and stuff, but at least you know. Now, that's at 2 p.m. We were only down 300, and then that's two things. We're back to down 900. Okay. So at this point, if you notice, I believe that we will open lower in futures on Sunday evening, and possibly continue through till Monday morning. By that time, the fast stochastics will be up here again. Once it gets towards the what do we call here? And I've wrote this many times, explained it. Just ask me a question if anyone caught on to it. When it's down here towards 0 or 20, what do we call it? It starts with the O. What condition is it in? What zone is it in?
Oversold?
Thank you very much, sir. Exactly. Oversold. This is oversold. When it gets all the way up here, somebody else?
Overbought.
Exactly. Not rocket science, guys. You guys know more football and sports stats that I probably won't even understand than this stuff. This is a lot easier. All right. So exactly. You guys do online betting and stuff. I'm sure you guys do. And you're like picking this and that, you know, the odds and shit. That's a lot smarter, in my opinion, than understanding this. But you know what the best part is? This makes more money. That's why. All right. So yes, overbought, what we call OB and OS. So when you get oversold, then there's a just standard technical propensity or probability that you're going to get overbought again. So the VIX should be overbought by the time we open on Monday morning, if the future is still down. Otherwise, it'll reverse mid-course and come down. Now, this is the one that I watch more carefully, which is the slow stochastic. This moves literally every, out. This one moves more. This one is more like slow and steady. So bottom line is the slow stochastic, look at it very carefully. I'll make this bigger for you guys. This column. That's why I love this platform. If Think or Swim, you can have this too, but you can't see this clearly. Yeah, you can see it, I guess, but I like it. It's clean. Let me clean out the what oversold, erase the drawings, get the pen, and you got overbought. It's starting to come down. Remember, this is the slow stove. This is the grandpa, or this is the one that controls. This is like sort of the head of the clan. This is more important indicator, in my opinion. So when the VIX hit 69 on and answer this question, think what I'm asking. When the VIX hit 69 on Friday morning, 9:30 when the market's open, how much were we down on the market? Roughly 900 points, right?
Yeah.
Or more. Correct. Look what the VIX did. It hit overbought conditions. As the hours went by, each candle is 1 hour. As the hours went by till 2 p.m., the VIX continuously, slowly but surely, crept down. So what happened to the stochastics? They started to move down too. See? So if we didn't have these two green candles, which were the big margin sells, chop, if we didn't have that, where would this slow stochastic be? If this didn't happen, then this slow stochastic would not have flattened. It would be
lower.
Probably, yeah, because the VIX would have come down here.
Yeah.
To the bottom of this range, which I just explained to you guys, which is 59 or so, 58. And the
so
market
it would have been at 20.
And the Yeah, exactly. Come down to this zone. Don't worry about the numbers, but just the zone. You know. So the bottom line is, and the market would probably be only down 100 points, and on certain stocks that we were buying during the day, we'd actually be profitable, which I was doing very nice. Till some of them just all of a sudden, boom, between 2 and 3. So no big deal. It's like okay. So the thing is, like, and it happened really fast. So here's my question to you guys, and please, this requires simple thinking and a simple answer. The shape of the curvature of the stochastics are the most important things all of you guys need to focus on. Is the shape of this, and one person at a time. Let's start with Aldi because he shows up first on my chat room. I mean, on the go to meeting thing. A for apple. Okay, so basically, the curve of this slow stove. Just the first thing that what does your eye tell you, Aldi? Is the curve showing what? Lower or higher? Don't overanalyze it. Just asking you a simple question. What does your eye see in the first second is the right answer?
Lower.
Okay. Greg.
Lower.
And because I'm not going to tell you whether it's the right or wrong answers. I'm just asking what you guys see. That's very important. And Franco.
Over.
Lower. Okay. So you guys, that's what I see also. So I don't know if that's the exact answer, but generally, if you look at it, it seems like it's lower. But for whatever reason, if this is going like this on Sunday night when futures open, you can rest assured this baby is going to go like this again, like we talked about. Got it? And that's a high probability of that happening. But who the care happens what happens before the market, because our main concern is what happens during the market when the market opens, right? So if it retests the overbought level before the market opens, great. That means it'll do exactly what it tried to do on Friday, which is open lower and keep on climbing. The market keep on climbing to the VIX right. Okay, enough of this. Now, the other chart that I kept on showing on the VIX, which is giving me more hope that this was just a quick, fat, multi-billion-dollar margin sellout at 2 p.m. Because I just don't make up stories in my head to make myself feel good. We all do. That's how we're humans, right? We make up stories in our head just so that we stay more confident. But in this business, I try to not make up stories, but try to analyze and process it through my brain so that I have some sort of directional bias, whether I want to hold my position or fold. So the one that I kept on showing you guys, I did it at the end. This is very important for everybody, by the way. And thank you for all three of you who are here, because your answers and responses are what's helping your peers in the same level of trading expertise understand this. So all of you should thank Aldi, Greg, and Franco for being here. Not me, all right? I'm doing my job. But these three gentlemen are explaining to you in simple terms what they're seeing, because that's what all of you new members are seeing on the other side. So this is the chart which I would like to frame. One day I'm going to create one of those ebooks with all my favorite charts. It doesn't take long. It's all on Dropbox. Thousands of charts from day one when I started, doing the service. I have every copy of that. I should just pick and select and just create an ebook. It'll be fun. It'll be like my charts are very colorful and all these lines. It'll be like a little. Maybe I'll make it a children's book. Just kidding. And they'll be just flipping through it like, wow, look at that. But for traders, it'll be fantastic. Okay, this is the one that I kept on showing you guys, and this is what I want to remind everybody. Please listen carefully. End of the day, I tend to show 3-4 what we call end of the week, end of the day chart. This was end of the week. EOW, EOD is end of the day, closing view. These closing views are extremely important because this is giving me an idea what the market is printing, both on the long, and all these charts I'll explain on the Sunday webinar. On the long, on the multi-week cycle, so it's very important for you guys to look at the end of the day charts, the 3, 4, 5 that I showed, and I always try to include the VIX with it, so you have an idea what you're leaving with when the markets are closing. You understand what I'm saying?
Yeah.
Exactly. Very important. Look at the beginning, like right off the beginning, like pre-market, what I post showing like projections, what might happen, and end of the day, and it's a great, fantastic educational tool. So this is the one that I kept on showing you 3 or 4 times during the day. It says the VIX Daily. It was printed at and all of you, all members who will be listening to this, okay, new members, is when they listen to this video, is please hit like, not to make me happy, but I want to see what engagement you guys are doing and which one has the most likes, so I know how to improve my content, as I've said many, many times. It's very important. Feedback is very important, and the only feedback you can give are either comments or hit likes. So if there are only 3 likes, I'm like, what? Everybody's just blind? No, I know that everyone's just tired, exhausted at the end of the week, but there should be a heck of a lot more likes just because you felt that that chart was important. For me, it's very important. I just want to pass it on to you guys. All right, so saying all that, but when I do view tweet activity, there was 137 impressions. So I don't quite understand. Times people saw this tweet on Twitter, 137. Total engagements, 21. Even though it only shows 3 likes. So what, people are seeing it but not hitting like? I don't get it. View all engagement. 4 people opened it up to see it. Those 4 people are smart. They're probably making money. And there were 3 likes only. So all these numbers, so the 137 people saw it. And this applies to all tactical alerts, posts, and everything. But they didn't have the time to hit the like. Okay, I can't force anybody to do that. 21 times people interacted with this. That number should be higher. Media engagement 14. That means media counted. The detail expands. Only 5 people opened this to see it. Come on. And then you guys complain when you lose money. Okay, let's go. So so this chart is very, very important. And everything that we talked about on the short-term VIX, which is the 1 hour. Remember, this is the 1 hour we talked about. The intraday movement, each candle is 1 hour. This is the big daddy of all. Or the big mama, whatever the case may be, is the daily. So let's get into the daily VIX. This is what is keeping me excited about the fact that, like I said, reflex rally continuation. Like I said, reflex rally continuation. The VIX suggests lower next week. In other words, we still have a little bit more room to move, and I've showed clearly in my on my technical S&P chart and the E-mini chart that we still have a little bit more room to move higher. Yes, you guys saw that. I'm sure you guys have seen that, right?
Yes.
Exactly. So this part of my determination is based on what I'm reading on the daily. And you guys are the first ones who are going to get this explanation. And you guys will probably know the answers because you have already answered all the right questions because you're understanding it on the previous VIX that we saw, the 1 hour. This is the big daddy of VIX. This is the daily chart. 1 second, gentlemen. Let me get the pen. Okay. So this is when VIX hit 85. When the market, it was all over. It ain't over till it's over. I said we were going to go to 2200 S&P. We actually went to 2180 pre-market. I was dead right on that, and it was fantastic. The VIX fell hard, and the VIX fell to these levels, and I've structured all the lines, and they're going to be pretty much correct, in my opinion. And I've put the numbers, generated the numbers on the side. So the VIX basically went ballistic, and then created a false sell-off on a Monday, and then on Tuesday, the market started going nuts. It was the best week in the market despite the 900-point drop on Friday since God knows when. Markets were up more than 10%. So more than 10% or more than that, I'm not quite sure. The bottom line is, see this is the daily, remember. What do you see in these candles? You see large selling from the VIX 75 down to 60, from 85 down to 70. You're seeing big, fat red candles. With the VIX, do we want to see green candles or red candles?
We want to see
Come on, man. You should
Red.
know the answer.
Red.
Of course. Of course. Greg, do we want to see green candles or red candles on the VIX?
Big red.
We want to see red candles. That means the VIX is going lower if you are long. If you have all your money shorting the market in SPY puts and whatever the case may be, here you want the VIX coming down. But if you're short, do you want green candles or red candles? If you have short position.
You want green candles?
Correct. That means that you want the VIX to move higher.
Mm-hmm.
So on those few SPY puts and stuff that we played here and there during the monumental crash when the market hit all-time low, and those puts went from $3 to 15 or so, then the green candles basically did the job. So good. So now this is a very simple but critical concept for trade management. So now that we have come down, just again the same question I asked you on the previous VIX chart. When you quickly look at it, does it look like it's going down, or does it look like it's going up from where we are right now?
It looks like it's gonna go up again.
Looks like it might go up a little bit more, right?
Mm-hmm.
Yep. So that is a possibility. So that is a possibility, and that could happen as early as Monday for reason? For we don't know the reason, but what we talked about. Did you understand what Franco said?
Yeah.
Yeah.
So let me get you guys more into the technical mode here. When you look at this, what do your eyes tell you? You don't have to go with what Franco said. He could be right, he could be wrong. I could be right, I could be wrong. So, but I'm going to tell you why I think the VIX is going lower. So when you quickly look at this chart, let me try to put it in the middle of the screen. Hold on, sir. Or sirs. There, that's better. Big. 1 second. Clean this out. I'm going to ask all of you, when you look at this is your answer is important not to me, but for everyone else who's going to listen, because they're learning from you, as you're learning from me. Is when you look at this, what's your first impression? Higher or lower? Don't think. What's your first impression, my friend?
Lower.
Okay, like I said, this has to be a half a second answer. You cannot analyze it. The analysis is coming in the next few minutes. Greg.
I'd say lower.
So that's what your brain is telling you, right?
Yes.
Okay, so let's look at both sides, Franco's side and the lower camp. And if it goes lower, then that means the market will open up higher on Monday, and it will be a continuation of the 3-day rally that stalled on the 4th day, but technically nothing bad happened. And for reasons for that, just go to my Twitter feed. I wrote it like at least 20 times as to why I believe that technically we are still intact for a slightly higher price, a couple of hundred more points, if not 1,000 points. You guys did see that on the Twitter side, right? And right, many times that I put on the charts why I think this candle, that candle.
Yeah.
Okay, if you haven't seen it, don't worry. Now is the time to do it. We're stay at home, right? Raining outside. He's not going playing football with the virus, with Corona. So just take a look at it. If you didn't get a chance during the daytime. All right. The bottom line is that I think, given what I see here, and this is a very geometric chart, that this was the apex. Apex is the height, right? I always get my brain messed up with apex and nadir. Nadir means the bottom, right?
Apex.
I'm going to look it up on Google. I always mix it up. Apex means the top. 1 second. APEX. Let me check. It's just a fancy word for. Hold on. What's wrong with me? Today I tried to check my accounts on Thinkorswim. I couldn't even get in. So I called up Thinkorswim right before I started this webinar. And they're like, no, we're not aware of everything I have to do. You can't even get into the site. So they fixed it in 5 minutes. I'm like, they said nobody's reported it. I said, really? That's great. The guy was really nice, but that was really stupid. Like I'm the only one in millions of people who use Thinkorswim, or hundreds of thousands of people who are calling in and say, hey, we can't get into the thing. I'm not trading. I just wanted to check and see that they settled all the monies and stuff properly. Okay, Apex is the highest. Okay, so is this so this is what we call, so this is the apex. This is the high point, like the peak of the mountain. And this, if it comes down here, is going to be what they call the nadir, N-A-D-E-I-R. So whichever the case, I feel that the VIX right now wants to come down towards the first level of contact, which is 55, and the next level of contact that it did come down to on what date was it? On the 24th. On the 24th, which was on
Tuesday.
On Tuesday, and even though it went up a little bit for some weird reason, the markets also rallied very hard. So I believe that if you look at these support levels, red lines are always support. I believe that the VIX, in my opinion, will come down here and most probably towards 50. So it'll be it'll be this red line towards 50. Do I think the VIX will come crashing down towards 20? No, I don't think so. That'll happen only if we get the vaccine. Less people are dying, unfortunately, of coronavirus, and the coronavirus curve starts to flatten. You hear this term a lot, the flattening curve. That simply means the number of deaths from the coronavirus is starting to come down. So once you start to get that in the US, now it's shooting up like crazy. New York, even New Jersey, but New York, oh my God, number of people will be hospitalized, and the number of deaths, which is not a huge number percentage-wise, but the number of deaths is rising like crazy. It's very sad. So the bottom line is we're in that acceleration phase right now with the virus. So once the virus starts to calm down, the VIX, don't be surprised, can crash back towards these levels. I don't think it's going to go to 20. I don't think it's going to go to 45. I think the VIX comes down to 50. Now, why do I not that? I'll explain all that on Sunday. I don't want to get into that. I believe that this massive economic disruption that has happened, businesses and the U.S. economy losing trillions of dollars because everything is shut down, will have an effect on the U.S. market. So saying all that, we're talking about short term. What's happening next week? We need money to eat. So bottom line is that when you look at the chart, two of you said lower. I believe lower. Now, I'm not, Franco, what he correctly did, he looked at the shape of the candles. And I think, Franco, I'm right. He looked at the shape of the candles, and to him, this was still kind of a reflex bounce where the VIX can hit that 70 level or maybe 75. That's what your eyes looked at, right, Franco?
That's correct, yeah.
Exactly. So what he looked at is 100% correct. He just looked at this bounce here. Now this bounce can be looked on as a W. It bounces up here, then it bounces back, and then makes another big move higher. That can happen. And bounce downs are good because that means the market will drop. So again, we are looking at that 70 level, 69, 70 level, as Franco correctly pointed out. That can happen in the futures market on Sunday before Monday, right? We explained all that. Okay, good. Now let's cover. Now let's look at this, and now there is a resistance. Look at this powerful red line, and that is at 69. That is at 69. The VIX closed here. The body is very close at 65. The VIX closed at 65. So for it to go up 4 points to 69 is nothing. It's what dangerous becomes is if it breaks out like this. But it might hit a major resistance here at the level we said, and then drop again. That is what I think is going to happen for this reason. which you guys already probably saw. What do you see here, which is, that's why this is a game of probability. This is the most important aspect of predictive trading. 99% of trading services out there will tell you, trade what you see. In this day and age, when machines are moving at speeds which are 1/1000th of a second, what the hell do you see? By the time you see it, it's over. In many cases. Am I right or wrong, Greg?
Yeah.
And that's where the frustrating part comes in. For me too. But we can't do anything about it. So when the other trading services out there, without naming any, who tell you trade what you see, they're living in a world we don't live anymore. They live in a world where people still use a chalk and a blackboard to calculate numbers. Now it's super fast computers. So I don't believe in that garbage. By the time you see it, it's over. Now, a lot of the stock, yeah, you see moving and you get in, that's a different story. But I'm talking in general, you have to have a predictive element to see what happens. And I think all of you guys will agree with me on that. So saying all that, what is here that gave me, so it's a game of probability. We try to figure out, is it more, just like any other thing in life, right? Like, yeah, what's the chances of winning? So what are the chances based on the internals or the slow stock? S stock, very powerful. S stock. S stock has made so many of our members so much money on things that I've shown, repeated it, they understand it. When S stock bottom on the stock, that's when we want to buy like crazy. For a stock, it's different, right? For a stock, you want it to be very oversold. That means very cheap. You can buy those calls real cheap, and when it bounces up, boom. We went through that this week in a big way. Except a bunch of people were not positioned right, and they couldn't even catch the rally because it was just so furious. Like the day we went up 2,000 plus points. I mean, it couldn't buy it. It was just going down, 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 down. And if you didn't buy it, jump more. I don't like that. I like selling into that. That's the beauty. Like I said, shooting fish in a barrel. You know, got to reload the Glock, like repeatedly. You're just shooting fish in a barrel. That means taking profit. It doesn't mean shooting fish, guys. So those are beautiful days. But those are not days to buy. Those are mostly days to sell. So saying all that, what is here that you see? A one person at a time. That gives me the mathematical probability the VIX has a better chance of falling towards the levels that I have shown than rising. And VIX falling is good. That means the market will have a short bounce. Maybe Monday. As early as Monday. So one person at a time. All these. It's the same thing we talked about a few minutes ago. Focus on the internals. We talked about the externals. We talked about the price movements in the candle. Focus on this section here, the S stocks. Why do I think that the VIX has a higher probability of pulling back than going higher?
Is making the turn.
Explain. What's making the turn?
Okay, I think the orange line.
What is the orange line? You have to know the terms. I've said it about 30 times in the last 30 minutes. Okay, next person. Think about it and come back with the answer. Greg, please.
Why do you think it's going to continue to go lower, not higher?
What are you talking about? Let me ask my question, Greg, and answer, just think about what I'm asking. We just talked about for the last 15, 20 minutes that what our projections are on the VIX. So Franco gave his projection, and I just explained that I think, listen carefully, that I think that staying long, that the markets will continue with their rally that they did till Friday when we pull back, that I believe the markets will bounce next week. And we talked about that. Now, why do I think that? Looking at the VIX, and I asked you guys to focus on one column only, which is the slow stochastic. Aldi, write this down. S stock is slow stochastic. It's all on my Twitter feed too. Just call it S stock, slow stochastic. So why do I think there's a probability the VIX will pull back and the markets will bounce by early next week?
I'd say because the slow stochastic is in a downtrend, and even though the candle's printing green on the VIX, it's still going down.
Stop. You got the answer, dude. Thank you. It's very simple because in my eyes, and Greg clearly explained it,